nightly business report.
Good evening. Tonight, after Sri Lanka successfully completed the third review of its extended fund facility program, the International Monetary Fund announced that it would closely monitor the country's progress on fiscal and structural reforms ahead of the upcoming fourth review. February saw a downturn in Sri Lanka's national tea sales, with the average price per kilogram dropping to 1,168 rupees and 93 cents, a decrease of 16 rupees and 50 cents from January. On the third trading day of the week, the Colombo Stock Exchange experienced a positive turnaround, reversing the downward trend observed in the previous days. And US stocks closed lower, with the tech-heavy Nasdaq approaching correction territory as trade tensions heightened after President Donald Trump imposed new tariffs on Canada, Mexico and China.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. The International Monetary Fund has announced it will closely monitor Sri Lanka's progress on fiscal and structural reforms ahead of the upcoming fourth review, following the successful completion of the third review under the country's extended fund facility program.
The IMF has approved Sri Lanka's third review under its extended fund facility, allowing the country to access $334 million, bringing total disbursements to $1.34 billion. However, the IMF cautioned that further reforms are essential for sustaining economic recovery, particularly in strengthening tax compliance and eliminating exemptions. To meet the 2025 tax revenue target of 13.9% of GDP, Sri Lanka must generate additional gross revenue gains of 1.6% of GDP. The IMF also highlighted the growing fiscal risks from the state-owned enterprises and stressed the need to restore cost recovery electricity pricing. Social spending targets must be met, with reforms to the social safety net ensuring protection for the most vulnerable. As Sri Lanka prepares to pass its final budget this month, the IMF will closely monitor alignment with the fiscal parameters. Despite challenges, IMF Senior Mission Chief Peter Brewer praised Sri Lanka's recovery, noting a 5.5% growth rate and a 40% recovery of lost income since the economic crisis in 2022.
Sri Lanka's state-run Ceylon Electricity Board posted an operating loss of 3 billion rupees in the December 2024 quarter, despite a marginal net profit driven by other income and gains. Revenue dropped 28% to 111.8 billion rupees, while the cost of sales rose 49% to 116.2 billion rupees, resulting in a gross loss of 4.49 billion rupees. Exceptional rainfall in 2023 helped lower costs, while higher selling prices also contributed to the revenue. The CEB managed to offset part of its administrative expenses with other income and gains of 11.3 billion rupees. For the full year, the CEB posted profits of 144 billion rupees, bolstered by foreign exchange gains and 26 billion rupee capital gains from selling shares of LTL Holding. However, concerns persist regarding Sri Lanka's electricity tariff policy, especially following the Public Utilities Commission's 20% tariff reduction in January, which the IMF flagged as a missed structural benchmark. Sri Lanka's national tea sales experienced a decline in February, with the average price per kilogram falling to 1,168 rupees and 93 cents, reflecting a drop of 16 rupees and 50 cents compared to January.
Sri Lanka's tea sales saw a year-on-year decline in February 2025, with the average price dropping to 1,168 rupees and 93 cents, down from 1,320 rupees and 71 cents in February 2024, a decrease of 151 rupees and 78 cents. The year-to-date national sales average for 2025 stood at 1,177 rupees and 35 cents, reflecting a decrease of 116 rupees and 43 cents compared to the 2024 average. An analysis of tea sales by Elevation revealed mixed results for February, with all categories except for high-grown experiencing a decline compared to January. The high-grown category showed a negative variance in Sri Lankan rupees but a positive gain in the US dollar terms year-on-year. Meanwhile, both mid-grown and low-grown categories saw negative variances in both LKR and US dollar terms year-on-year. These declines highlight ongoing challenges in the tea sector amid fluctuating global and local market conditions. The results reflect broader trends that could impact Sri Lanka's tea export performance in the coming months.
The Department of Wildlife Conservation announced the reopening of select roads in Yala National Park today following temporary closures due to heavy rainfall. While some roads were reopened, others remained closed to prevent further damage. The department emphasized that the situation was fluid with additional closures or changes possible depending on the weather conditions.
Visitors urged to stay updated on any further developments. The park had previously closed certain roads due to safety concerns caused by the adverse weather. The reopening marked a positive step for tourism in the region as Yala began recovering from the impacts of the recent rainfall. Authorities reassured tourists that efforts to maintain park safety would continue in the coming days. They also reminded visitors to follow park guidelines for their own safety.
Sri Lanka's rubber market faced a price decline in January, accompanied by a significant reduction in the quantity offered at public auctions, as reported by Forbes and Walker Commodity Brokers.
Sri Lanka's rubber market saw a significant price decline in January, with the total quantity offered at auction dropping 577,368 kilograms from 711,379 kilograms in January this year. The top grade LCR1X fetched 925 rupees per kilogram, while other grades experienced price drops, including a 65 rupees decrease for latex scrap number 1. Prices for number 2, number 3 and number 4 grades also saw declines, with reduction of 28 rupees, 11 rupees and 70 rupees respectively. The scrap creep segment faced a mixed trend, with some grades falling, but 3x brown and 4x brown saw slight price increases. The rubber sheet scrap market was largely inactive as tire manufacturers sourced cheap imports and some small holders withheld stocks. The downturn in rubber prices is attributed to factors such as reduced local demand, US tariff regulations and falling crude oil prices.
Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. On the third trading day of the week, the Colombo Stock Exchange saw an upward momentum, reversing the downward trend from previous days. Both the All Share Price Index and S&P SL20 indices experienced an increase compared to the previous day. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Anuradha. The Colombo saw a change of momentum during today's session, where the market ended in green, reversing the red trend that we have seen during the past week. Also, with that, we saw SPI gaining about 290 points during the day and closing at 16,162, while the S&P SL20 also gained by 78 points to close the day at 4,826. The reversal in sentiment was largely driven by the bargain hunting by the investors, as we saw both index heavyweights as well as banking sector shares fall into very attractive levels. So with that, we saw some bargain purchases coming in during the day. Meanwhile, the largest contributors to the day were mainly the banking sector through Sampath Bank and Hatton National Bank, while Bukit Dara, Haley's and Melsakop were also the largest positive contributors to the day. Meanwhile, on the negative contributors side, we saw Selinco Insurance, Sri Lanka Telecom, Vidul Lanka as well as EB Creasy as the largest negative contributors to the day. In terms of turnover, we saw turnover surpass 5.1 billion during today's session, bouncing back from very low turnovers we saw during the past few days. And with that, we saw the turnover surpassing the monthly average of around 3.3 billion, which was recorded for the past month. Thank you.
Sri Lanka's latest Treasury bill auction saw strong demand, with all offered maturities fully subscribed. The weighted average yield rates were slightly lower than the previous auction, reflecting continued investor interest in government securities. For further insights, we speak with Demanta Matthews from First Capital Holdings.
Thanks. Today's bill auction, the central bank offered 167 billion of 3 months, 6 months and 1 year bills, and all 167 billion has been accepted and raised during the auction. So we saw a very slight decline in the auction rates, with the 3 months dipping by around 3 basis points, ending at 7.53%, while the 6 months dipping by a mere 1 basis point, ending at 7.86%, while the 1 year also dipping by around 1 basis point, ending at 8.34%. So something interesting to note is that both the 3 months and the 6 months is below the policy rate of 8%, and if you look at the standard lending facility rate, which is at around 8.5%, all three bill rates are below this rate. So something interesting to note is that we are seeing still the rates declining despite it being below the standard lending rate. This is primarily because of the high level of excess liquidity that is there in the system, supporting the rates to slightly come down. However, now we are seeing a very slow dip in the rate, so we are seeing that some amount of bottoming out effect is taking place. With, if you take the 6 months, we are seeing an under acceptance in the 6 month bill, while the 1 year bill was accepted over the offered amount. So basically we feel that some amount of bottoming out effect is there in the interest rates, and we expect this trend to rates to be stagnant over the next few weeks in the auctions that are coming ahead.
Gold prices edged lower in Asian trading today as the US dollar ticked up, though escalating trade tensions following President Donald Trump's tariff announcements kept losses in check. Spot gold dropped 0.2% to $2,912 per ounce, while gold futures expiring in April gained 0.1% to $2,922.72 an ounce. Trump's decision to impose 25% tariffs on Canadian and Mexican goods and raise tariffs on Chinese imports to 20% has raised concerns in global markets. In response, Canada imposed tariffs on $30 billion worth of imports, while China levied tariffs on US agricultural goods like soybeans and pork. Trump reaffirmed his plans for reciprocal tariffs in congressional speech set to take effect on the 2nd of April, further heightening trade tensions. As a result, the US dollar strengthened, with investors seeking the safety of the world's primary reserve currency amid growing global uncertainty. Oil prices fell slightly in Asian trade today as markets remain cautious over tariff-related challenges and rising global production. Brent oil futures for May dropped 0.2% to $70.93 per barrel, while West Texas Intermediate crude futures decreased 0.3% to $67.46 per barrel. Both contracts remain near a 5-month low reached earlier this week as concerns over declining demand intensified due to economic headwinds and higher U.S. trade tariffs. U.S. President Donald Trump's decision to impose higher tariffs on Canada, China and Mexico added to market uncertainty. Oil markets were also unsettled by reports that OPEC Plus plans to begin gradually increasing production from April. However, crude prices received some relief from China's 5% economic growth target for 2025 and a series of stimulus measures, along with a larger than expected draw in U.S. oil inventories. The Sri Lankan rupee has shown a notable appreciation against the US dollar at commercial banks today compared to yesterday. According to the commercial bank, both the buying and selling rates of the US dollar have remained stable for the second consecutive day. Let's take a closer look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. People's Bank reported a significant financial boost for 2024, announcing consolidated operating income of 145.1 billion rupees and a post-tax profit of 28.8 billion rupees, marking impressive growth of 49.9% and 152.7% respectively.
People's Bank reported a significant financial performance for 2024, with consolidated net interest income rising to 122.9 billion, driven by effective asset and liability pricing. Net interest margins improved to 3.7% from 2.1% in 2023, while net fees and commissions reached an all-time high of 15.3 billion rupees. The bank's total consolidated customer deposits increased to 2,947.9 billion rupees, while net loans decreased to 1,665 billion rupees, reflecting a 5.7% growth excluding loan settlements. Total consolidated assets grew to 3,471.7 billion rupees, with capital adequacy ratio standing at 10.9% for Tier 1 and 16.5% for total capital. Chairman Professor Narada Fernando highlighted the bank's resilience despite the challenging macroeconomic environment, focusing on innovation, collaboration and financial inclusions as key priorities. CEO Cleve Fonseca praised the team's adaptability and commitment to excellence, noting that the bank is well positioned for sustainable growth. Looking ahead, People Bank aims to continue driving innovation and delivering exceptional value to its customers and stakeholders.
CH17 Loyalty has partnered with Classic Travel to introduce Sri Lanka's first ever Platinum Black travel card. This co-branded card offers exceptional benefits to customers, including traveling points, premium services and exclusive discounts on luxury brands.
The Platinum Black card is designed for high-end travelers and provides users with a range of privileges such as cashback offers and flash deals. CH17 Loyalty founder and CEO Jomar Prina expressed pride in working with Classic Travel, a leader in the industry. Classic Travel CEO Shiham Imamuddin highlighted the transformative potential of the collaboration for the travel sector. The card is exclusively available through Classic Travel when purchasing tickets, aiming to redefine the travel experience for loyal customers.
Lanka Pay announced the 2025 Tech Innovation Awards set for the 26th of March at the Shangri-La Hotel in Colombo. The event will recognize leaders in payment technology innovation for the 8th consecutive year.
Lanka Pay has announced the 2025 Tech Innovation Awards scheduled for the 26th of March at Shangri-La Colombo. This prestigious event will recognize leaders in the payment technology innovation for the 8th consecutive year. The awards aim to honor pioneers who have significantly contributed to the growth and development of Sri Lanka's payment systems. A media briefing was held with the representatives from Lanka Pay at the central bank to provide further details about the event. The awards ceremony is the first of its kind in Sri Lanka, focusing on advancements in payment technologies. The event will highlight the importance of financial innovation in transforming the country's payment landscape. Lanka Pay continues to play a vital role in enhancing Sri Lanka's national payment network through initiatives like these. The awards will also offer a platform for collaboration and knowledge sharing among industry leaders. This initiative reinforces Lanka Pay's commitment to fostering innovation in the financial sector.
Hatton National Bank set a new benchmark at the National Sales Awards 2024, winning 7 prestigious honours. The bank excelled in both the all industries and banking industry categories, with 3 awards in the former and 4 in the latter.
Notable winners included Chatura Bhagya Kodikara, who received a bronze award in the Other Sales Support Assistant Manager category. In the All Industries category, Nishantan Karunaraj earned a Merit Award for Regional Sales Manager, while Bashita Veerasinghe won a Merit Award in the Non-Executive Sales Support category. Among the banking industry winners, Akil Ahmed and Lakshan Hasindu clinched silver awards in the Sales Executive and Sales Supervisor categories. Additionally, Dasun Uturuvela and Vishwa Velagedara both earned bronze awards for their roles as Territory Manager and Sales Frontliner respectively.
IEPSL is hosting its annual technical sessions themed Empowering Environmental Professionals for a Sustainable Future, focusing on equipping professionals with the knowledge and skills for sustainable development.
The Institute of Environmental Professionals Sri Lanka is set to host its annual technical sessions with Dr. Mark Smith, Director General of the International Water Management Institute, delivering the keynote address. His presentation, titled Innovative Solution for a Greener Future, Leveraging the Power of Water, will focus on water management and sustainable practices. The sessions will feature a high-profile panel discussing on leveraging technology and innovation in sustainable development, and presentations on industry best practices under the theme Harmonizing Nature and Development. IEPSL will also collaborate with the Clean Sri Lanka initiative, hosting a dedicated panel discussion on its contributions to the national project. The event will mark the official endorsement of the IEPSL Clean Sri Lanka partnership, further promoting environmental dialogue. Over the past year, IEPSL conducted over 10 training programs reaching more than 900 participants from the public and private sectors. Eco-Convergence 2025 is expected to attract a diverse audience including government officials, corporate leaders, academics and young environmental professionals.
Microelectric International Private Limited was recognized at the National Industry Brand Excellence Awards for its outstanding contribution to the export sector. The company, which manufactures and exports electrical products under the Devoka brand, was awarded a Merit Award in the large-scale electrical and electronic and allied industrial sector.
Founded in 1995 by Dhammika and Kumari Samaravikrama, Microelectric has grown into an international supplier with manufacturing plants in India. The ISO-certified company has previously won numerous accolades, including SME Brand of the Year. Chairman Dhammika Samaravikrama and Deputy Chairman Kumari Samaravikrama received the award from the Minister of Industries, Sunil Handunetti. The event at Eagles Lakeside, Attidia, marked a significant milestone for the company after a long hiatus.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks rebounded today following hopes that US President Donald Trump may negotiate the steep tariffs imposed on Mexico, Canada and China. Regional equities also benefited from a rise in US stock index futures during Asian trading hours. Japan's Nikkei 225 rose by 0.5%, while Hong Kong's Hang Seng Index surged 1.5%, recovering from previous session losses. Indonesia's Jakarta Stock Exchange Composite Index led the gains, jumping 2.9%. South Korea's Kospi rose by 0.9%, while Singapore's Straits Times Index gained 0.3%, and Malaysia's KLCI increased by 0.6%. Meanwhile, India's Nifty 50 opened 0.2% higher, and Chinese stocks also saw modest gains.
Investors remain cautiously optimistic, awaiting further developments in US-China trade talks. Analysts suggest that any positive resolution could offer more stability to regional markets.
US stocks ended lower, with the tech-heavy Nasdaq veering near correction territory as trade tensions escalated following President Donald Trump's new tariffs on Canada, Mexico and China.
Trade tensions helped push U.S. stocks lower on Tuesday, with the Dow dropping 1.5%, the S&P 500 shedding 1.2%, and the tech-heavy Nasdaq veering near correction territory with a loss of about 0.33%. President Trump's new 25% tariffs on Canada and Mexico went into effect on Tuesday, along with additional 10% duties on imports from China. China and Canada retaliated, and Mexican President Claudia Sheinbaum also vowed to respond without giving details. Shares of financials were among the biggest losers, with Citigroup falling more than 6% and JP Morgan Chase losing about 4%. Shares of automakers, which have vast supply chains across North America, also fell, with Ford shedding nearly 3% and General Motors down more than 4.5%. Meanwhile, retailers Target and Best Buy warned that tariffs would likely lead to higher prices for their goods. Target shares fell 3%, while Best Buy slumped more than 13%. Tariffs will likely be a talking point for Trump when he delivers a televised address to Congress Tuesday night.
Switzerland's Lindt & Sprüngli reported a slightly better than expected full-year operating profit, demonstrating its pricing power in the face of historically high cocoa prices.
Chocolate maker Lindt & Sprüngli found consumers had the taste for their products last year. It reported Tuesday a better than expected full-year operating profit, and that came despite historically high cocoa prices. The Swiss firm said tight cost control, price rises and efficiency gains offset higher cocoa costs and pushed profitability. Analysts have warned the chocolate industry is in for a difficult year ahead as companies face unprecedented cost for the raw material. Market watchers warn this is likely to cause further price hikes. Lindt's earnings before interest and taxes hit $987 million last year, just ahead of analysts' projections. Investors liked what they heard and shares jumped over 8%.
But that's all from us here on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you for watching. Have a great night.